Hi everyone, it's Stephanie. Well, thank you for clicking on my YouTube channel, B2B Collections and Credit, which focuses on business invoice collections and business lines of credit. Today's video, taped May 31st, 2021, is a brief overview of credit analysis used by you, the credit analyst, in determining the credit worthiness of potential customers for your employer. Credit worthiness is the extent to which your customer will pay in full and on time. The credit line indicates just how much and how quickly you think they will pay, based on your analysis and their needs. Here now are some factors in determining if a business will receive a line of credit or if they will be COD, cash on delivery, or not even that. Here now are 4 resources or tasks to use in business credit analysis. Number 1, the ever-popular Dunn Bradstreet report. Number 2, business references which can have pitfalls. Number 3, financial statements. And number 4, fraud detection. First, Dunn Bradstreet, otherwise known as D&B. This is a credit reporting company of over 200 million businesses worldwide. It is to business credit what Experian is to consumer credit in the U.S. D&B also supplies Dunn's numbers, data universal numbering system for companies, which is a way to look up a company and is especially useful when a company is looking for government contract. By the way, D&B was started in 1841 by an abolitionist from New York. Anyway, D&B reports contain financial statement information, credit and payment history, business performance history, bankruptcies, likelihood of going out of business or filing bankruptcy, and analysis of companies' financial robustness. As such, it is usually used in business credit analysis. Second, business references, which can have pitfalls. Back in the day, you could just fax a pre-printed one-page sheet to other companies, usually some of your customers or other companies in the same field or industry, asking for their credit terms with your potential customers, seeking a line of credit with you. And you could ask just about anything by fax or by phone. However, according to Credit Today's December 21st, 2020 emailed newsletter, an article entitled Antitrust Violations, there are many things you cannot ask because they would be breaking antitrust laws. Some things you cannot ask other companies include 1, their pricing for their customer, 2, their payment terms for their customer, 3, credit limits, 4, if they are about to send their customer to a third-party collector, 5, unsubstantiated rumors, and 6, another thing you cannot discuss is collusion. There are other things mentioned in this article, but I just highlighted a few. You could easily make another video just on that article alone. Suffice it to say, these things fall under the Sherman Antitrust Law of 1890, which outlaws collusion and monopolies, and the Clayton Act of 1914, which specifies certain practices conducive to the formation of monopolies. By the way, the Clayton Act also authorizes private parties to sue for triple damages. But it seems like a lot of information is in the Dunn Bradstreet report already. Third, financial statement. These can be found in annual reports and a bit in the D&B report, because balance sheets and income statement can tell you about the health of businesses and projections for the future. This can help you decide if you're going to give credit and how much to a potential customer of yours. As a side note, CECL, C-E-C-L, came into effect in 2016, is a relatively new standard in accounting based on guesstimates of life expectancy of expected, not incurred or already occurred, expenses. This could possibly affect the accuracy of income statement, which begs the question to me if this will affect credit analysis of their income statement or companies' annual reports. And finally, fourth, fraud detection. This could easily be another video or video series in itself. Anyway, before deciding on the health of a company or the birds outside, first determine if it is even a real business or a scam. This has become a much bigger problem in recent years. A brief summary of things to look for are 1, more revenue and assets and fewer liabilities and expenses reported on financial statements than what they actually are. Number 2, for small businesses, fake invoices and the owner spending beyond their means. Number 3, fake websites using stock photos and no picture of their building, employees, or anything they manufacture. Number 4, websites with a lot of spelling or grammar errors. Number 5, licenses or registration not up to date. And number 6, no LLC, Inc., or Corp. with their names. Well, there are other things as well when it comes to fraud detection. This is a meaty subject for another video or series of videos. There are ways to check for fraud. One is using the AML, Anti-Money Laundering Watch List. That is interesting to me. Another way to notice fraud for future follow-up is use some of your common sense. Well, that's it for today's video on my brief overview of credit analysis for business. Thank you for watching. Hope you enjoyed it. Please feel free to like, comment, or subscribe. I appreciate all of it. My name is Stephanie. Thank you for watching this video on my YouTube channel, B2B Collections and Credit. See you next time.